All right, let's do this. Let's take a look at the Dow 30. Probably the most important video I do each week. We'll give you a good overview of, wow, some really important companies. So, starting off, Apple, 2.6%. And we're still putting in lower highs, lower lows. We are back above a 10 MA at 260. So again, keep in mind, how we're going to settle the month. If we have a long month, still not even halfway through the month. We could see reversals here, but Apple's trying to floor from the 10 MA again, which it did in March. I will note momentum is still so despite the gain right now, despite the gain, Apple momentum is still weakening, and of course it was briefly negative. Now it's back to fractionally positive, but you got to think it won't take much to turn it negative again. And in theory, net bearish into May, so Apple's not so great as it might look. AMGN struggling. Again, this is one of the more defensive stocks that finally saw a reversal in March. Currently down 0.25%, but not much, but still, you can see that momentum's weakening. Amazon powering up was 14.5%. Now that is something for the bulls. March candle was a reversal, so that played out. And we're back above a 10 MA, so we're technically short-term bullish again. Bears only need to see a break back under 228 to turn things, turn that candle. This is the thing. A lot of the bears should be looking for these gains to fade and to make that candle spiky. Momentum remains negative despite the gain. American Express currently up almost 4%, but it's under the 10 MA still. Momentum is still increasingly negative. It's the bulls. What the bulls need to see is they need to see American Express above 331. That will not be easy. I don't think it's going to happen. I'm still looking for a downside to at least a low Bollinger, 245. All right, continuing. Boeing, 9.3%, although this is really just a multi-year chop, right? I mean, you want to be bullish? Fine. Bullish above there. I mean, you can be bearish under here, but again, it really is just a lot of swings. The company never recovered after losing two of those 737 MAX jets, right? With this giant head and shoulders playing out. Complete collapse, bouncing, but it's just a broad chop. Yeah. Yeah, this is one stock that has broken a new historic high this month. So there was a little bit of a bearish sign in February. March was down, but we're back. Bears are back to square one in this one. Currently up 11.5%. Wow, that's impressive. If you're bullish out there, this is one of the key stocks to be watching. I mean, RSI 81. That's crazy overbought. Momentum's on the crazy high side. I don't know. I mean, how the hell can this be up so strongly? I mean, really? It is what it is. Salesforce, yeah, down 11.5%. So despite the fact that the main market's had a hell of a bounce in the last 2 weeks, Salesforce is still down 11.5%, 164. Basic target is a challenge to be around what 130-ish. 130 is another 19 or so percent down. But yeah, this is horrible. There is nothing good here yet. Absolutely bearish. For Cisco, so it's had a bounce. It's up 6.5%. The April candle's a little bit spiky. Chevron, mostly just cooling back with oil. Down almost 9%, but it's still comfortably above the 10 MA. Momentum is subtle rollover. That's a concern, but uh, you could just argue it's just a bit of cooling after this big push. The mouse, Disney up almost 3%, $99, but again, this is still midterm bearish. Momentum is still increasingly negative. That's a problem. Lots of background talk about Marvel and Star Wars and other franchises that they've just ruined. What a shame. Goldman Sachs. Goldman has earnings on early Monday, and they will be fine, right? Goldman's up 7.3%. Uh, it had a little spike from the 10 of May in March, and then we're powering above the March high. Nothing bearish with the squid, right? I mean, apart from the only bearish aspect is that monthly momentum is still weakening. Depot, we're trying to fall from the 50-month average, which is what we've been doing for many, 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 many years. If you're bullish, this is one stock you need to see keep pushing upwards now. That would be a really good sign. If you're bullish the economy and think that everything's going to be great, you need to see this stay positive and keep pushing into the summer. If we settle under the 50-month average, that's a problem. I think we're still going to go to 250, but I accept that right now that candle is a bullish hammer. Again, the month has not settled. Very important stock to watch. And it clearly 2.5%, we could drop that in a day next week. So, it's going to take much to turn that candle outright red and then resume back down towards 300 threshold and then 250. For the record, 250 is my guess. Honeywell, nothing particularly bearish here, up 4%. You can argue structure is a multi-month bull flag. Momentum's actually accelerated upwards. Yep. IBM, again, it's been dragged down with other tech software stocks, down 4.8%. This is a lousy. This is really bad considering the main market. This is a terrible candle. I mean, there's nothing good here. I mean, look at this. Lower Bollinger, what, 188? That's what, $42 down. Which is about 17%. Nothing good there at all. Absolutely bearish. J&J. Again, one of the really boring stocks that most people don't care about, but it's notable that this month and in March, that even the boring defensive stocks have started to break. So look at this, had a hell of a run from 137 to 251. It almost came close to doubling up, but it looks like it is short-term broken. Something to watch. JP Morgan, which has earnings early Tuesday, up 5.9%, pushing slightly back above the 10 MA. Again, the equity bears need to see this one cool back. The bears do not want to see this settle April above the 10 MA, which is currently 304. It's only $5 down. It's not difficult. Momentum is still negative. And typically, the financials do tend to sell off on earnings. That's just how historically it's been. And we know earnings will be fine, but, you know. Coca-Cola, which I had some just earlier, actually. Currently up 1.9%. Nothing particularly bearish. I mean, the March candle wasn't great, but we're kind of just bouncing with the main market. Momentum is moderately stuck. It's on the high end. I mean, the threat will be of some cooling. McDonald's generally trades similar to Coca-Cola. It's actually a little bit weaker than that, down 1.6% actually. So the March candle was bearish engulfing, and that's playing out. This is a concern. Momentum has turned negative. Yeah, this is actually rather bearish. Again, I was saying, of course, the last few days, Bearish restaurants, bearish fast food, and that includes Shake Shack, McDonald's, Wendy's, Texas Roadhouse. Um, this is a problem, right? The higher gasoline prices are dissuading people from driving and going out. So yeah, bearish McDonald's, fine company. They make good fries, but again, this is one to watch in terms of the 50 monthly average, the green line. So you see there last, actually in July of 24, bounce. COVID had a flash print under it, but it never settled under it. And then you see in April solid upside. So yeah, if you're a crash calling maniac that thinks the S&P is going to get cut down to 3,500, you need to see stocks like this one cut under the 50 monthly average. The only two stocks I'm aware of so far that have done that are Microsoft and Home Depot. And clearly this one isn't anywhere near it yet. Let's keep going. 3M. We have a nice little bounce off the key price threshold that goes back many years. You can argue it's just a bounce for the main market. Momentum's still weakening. Again, if you're bearish, you need to see this sort of stock turn red before the end of the month. Merck, choppy. You can argue it's just churning out a top before it breaks. Certainly, cyclically, it's on the high end. Microsoft, you can see it's trying to hold the 50 monthly average. So it did break it in March, but it didn't quite settle under it. And price action relatively is very tight. If we settle under the 50-month average, that would be a monstrously bearish sign. So we're at roughly 367 right now, so it's only $3. And if we settle under this little green line, my target would be this low. The 207s from November of 22. Nike. Ooh, that's horrible, right? That is absolute abject horror. This should be my screenshot for this video. Look at this. I mean, look at this. 166, 117, 78s, 68s. Oh, this is where Tim Cook and the CEO of Nike were buying. March saw a massive break of support. So this isn't surprising at all. I mean, it's amazing to see, but it's not surprising because it's a clear break of trend. 42. Already 42. One thing that should be quite clear. Nike is going to be kicked out of the Dow 30. I don't know who it's going to be replaced by. Who knows? Impossible. I can think of a great many names that would deserve to be in the Dow. But one thing is for sure, Nike's getting the kick. If I drag it out to a 15-year time frame, you see where's the next support? I mean, look, we are under 2017, 2016. Where's the next support? I mean, there isn't really anything. I mean, really. I mean, you could argue 21s. I mean, 25, 21, 20. I mean, this is horrible. I mean, again, the consumer is broke. They can't justify buying shoes. This is horrible. I mean, anybody trying to buy into this is out of their goddamn minds. It's a terrible thing. It's going down. Moving on. Ah, the NVDA. Oh god, this is where the hysteria stock. Great company, great products, but I can't stand the hysteria around this company. And the CEO is increasingly annoying. 8% on a month, so we're trying to punch back above the 10 MA. And it's like now it's a case of do we hold it or do we unravel? Because if we unravel, basic target is around a 150 minimum. And I will note that despite the bounce, right? Despite the bounce, we're still negative momentum. So, and that in theory will be a little bit lower in May. So this is not as good as it might seem. It won't take much of a cooling wave to turn it red. P&G, horrible candle in March. And yeah, it's up 0.5%, but that's a weak, that is an outright lame bounce of this. So yeah, this one's broken. Momentum's negative. Nothing good there. Sherwin-Williams, the paint chemicals company, 4.8%. I mean, more than anything, it's just a chop fest, right? Bullish, bearish, not really. It's chop. I mean, momentum's negative, so you could argue leaning a teeny bit weak, but it's a chop fest. Travelers, which has earnings next week, I forget when, but it's at 1.9%. March candle was pretty bearish. You can actually see there was a little bounce, and they're selling into the bounce again. So I think the cautious are going to be walking away. I would note also that we have not had a monthly close under the 10 of May since October of 23. So yeah, if we settle the month under 282, that would be a very bearish sign. And you could start to look to maybe 250, 240. United Health, 12.5% because of recent news that they're planning to increase Medicare payments to insurance by 2.48%. Isn't very much, but the market was relieved at that number. I would note that the current candle is a little bit spiky from the 10 of May, and the concern should be that we just stall again, and then we take another swing down. Again, that's going to need the main market to go down though. Something to watch. And momentum is prone to turning positive. Probably not May, maybe in June. Visa, 0.7. It's certainly leaning on the weaker side, but there's a lot of chop. It's in my view, I would never bother trading it. It's a chop fest. Momentum is still weakening. It clearly won't take much to turn that red for the month. Two more to go. Verizon. Now, this is one of the big stocks that has been very strong. It had a massively powerful start to the year. Look at this bullish engulfing candle in January. Massive follow through in February. New historic high. New historic high in March. But look at this. Even this company is breaking down now. We're down, so despite the main market up, we're down almost 7% for the month. You got to think, I think we have a good chance of getting to test the 43s. That would make for a horrible candle. But yeah, this is ugly. There's nothing good here. Also, look, momentum has rolled over. This is a problem because this gets a lot of big institutional money loves to be parked at companies like this, and a number of the defensive stocks have been breaking down. And finally, Walmart. Nothing particularly bearish here, is there? Right? It's up 2% for the month. It did break above the March high. Again, note the 10 of May. You got to be short and midterm bullish unless you get a monthly close under this. Look at how many times it just keeps holding above it. Even when it does break, the buy is poured in. Massive reversal here. And off we went again. So absolutely bullish Walmart unless it goes under 111, which that's $15 down, which is about what? What is that? 12% or so? I mean, yeah, momentum is leveling out, but really, that's bullish. Of course, finally, I should take a look at the Dow itself. First, we'll start with daily. It is notable that Thursday had a new little short-term bounce high. Friday was down 0.5%. In the scheme of things, it's nothing, and there is a downside gap that goes down to around the 200-day. So, this is what the Wednesday gap on the ceasefire news. The market jumped, so we have a lot of gaps around here. So, for the Dow, we have a gap around 46,800, which is, there's a good 1,000 points of downside here, right? Between maybe Monday and say Tuesday, Wednesday, Thursday. Although I keep in mind OPEX is Friday, which leans to chop. You gotta wonder where would they want to print them up, pin them down for OPEX? I gotta think they have a good chance of getting maybe down to the 200 day next week at 46.8. So yeah, cooling down to there, maybe take a couple of days to get down there maybe. So yeah, short term bearish to Dow on a weekly chart. That's so last week's candle was bullish engulfing. That played through this week, and now we're just a little bit spiky from the weekly 10 of May. I would accept that we could tick up for weeks all the way into May, June. But in terms of price pressure, we never got down to this level from last April, May. So we could roll over again and take another swing. And finally, down on a monthly. So as of April the 10th yesterday, Dow is up 1,575 points, 3.5%. We're back above the 10 MA. Monthly momentum does remain fractionally negative. So it's a bit of a mixed picture. Again, if you're looking for a big old down wave, we need to you need to see this candle turn red, and basic target would be 40,000. I accept 40,000 looks a stretch right now, but there's a war going on. There are some seriously bad things going on in the background, not least jet fuel, gasoline shortages, which are going to rear up in the next 1 to 2 weeks, starting with Europe and the UK. So yeah, it's a mixed picture. The month is still young. There's a lot going to happen between now and the end of the month. Certainly, some stocks are far more bearish than others. Notably, the defensive stocks, including Verizon, they're the ones warning me more than anything else of problems. And keep an eye on the monthly 50 MA for all these different stocks. Again, look in terms of the Dow itself. Look at where we floored last April. The 50 MA. We did briefly break it in late 22. And the Dow generally doesn't particularly care as much about it as other indexes do. But still, it's a pretty important MA. Anyway, not sure what you want to make of that, but have a good weekend.